Welcome to TradersArmy.com, defending your right to build wealth and preserve capital for generations to come. Good morning, everybody, and welcome to today's edition of the Daily Market Commentary. I am your host, Chuck Fulkerson. Hope you all had an absolutely amazing trading day yesterday, as we are about to kick off what we do each and every day, looking at the same 10 to 12 futures markets from an educational perspective, identifying potential breakout and reversal setups. So let's go ahead and dive right in. Really quickly, quick announcement for those of you that are in the Houston area, or if you know a trader in the Houston area, we are doing a Friday night traders kind of meetup group, just getting together, having some drinks, chance to share war stories and pick each other's brains. So I'll put the registration link down below. No pitch, just drinks. Come on down; it'll be a good time. All right, let's go ahead and get rolling. So in the S&P yesterday, we had identified this 15-minute level up above here. Now, this level was identified, actually back on our Sunday night live trading room. For those of you that are part of the live trade room, so we've had this level set up for a while. We got a nice entry into that level, and then price did indeed move down. Actually came to our first fair price value area for what would be a first setup target, and then a later one down here. So that worked for a nice 4-to-1 reward to risk. And then the second time through, we came close to the area, but we're unable to get filled. And we're actually moving down from that area again today. So I'm going to leave the area in place, but I'm going to switch it to a confirmation style entry since we did a, close to a touch and go out of that level. Make it a confirmation style entry if it indeed comes back up into there again today. When I look at my 4-hour chart, interestingly enough, this actually is a new swing high, right? If we come down from here, that becomes a new swing high, and then I have lower swing lows and lower swing highs. Yesterday in the DMC, we talked about what the Russell is doing, and that would be, this would be in lockstep. So I think it's okay to be a little bit more aggressive in entering a short when you have a market that gives you these kinds of opportunities. So if I go back down and look at, say, the 15-minute chart, we've got we started falling right at the European market open. I think there's a chance price will continue to fall, and so we're waiting for a rally back up into a decent area of supply in order to get short. Right now, my areas up here, they're not quite as clean, and so keep an eye on a potential rally and then a drop. If we see something that sets up today, we will add it to the private trade feed at TradersArmy.com and let you know that level has set up. Right now, I don't have a great short setup, so I'm going to leave it be with what I have in place. The NASDAQ yesterday, we talked about, if you wanted to, you could take a breakout long above this 73.91 up until this area here to then set up for a short. And that's exactly what happened. So leave a comment down below if you're able to take advantage of either the reversal short or the breakout to the upside, because both levels worked exceptionally well. The breakout long worked up to our price target, and then we hit our short entry and price came down to our opposing fair price value area. So this is combining a breakout trade with a reversal trade. So it's catching the breakout trade on the way up and the reversal trade on the way back down. Now I need to remove these. I need to remove this level because this level we've broken through. It's already done. And then the above level here, I'm going to also remove it. Now I'm removing this one because we traded all the way to the top of the level. I don't feel like we're going to give that one another ride, if you will. So if I go to the 15-minute chart, looking at this, very similar to the S&P, I don't love this level. It's not a very clean level that I have in place right here, although we've kind of come down from there in the past. And then there's a couple of areas up here, but none of those are overly clean. So very much I would look for a potential breakout to the downside and keep an eye on the trade feed to see if something does indeed come out of that level. In crude oil, we actually, for the two trades that worked out really well, crude oil was a tiny little stop loss. Now this one 59.94, 60.06. So it's a it's a very small, tiny little level where price came into that zone. And we just blew right through it. There was no 6 candle rule. There was no basing in front of the level. Everything here said, "Hey, get short," and then it lied to me, and that's okay. I'll take it. Those kinds of things happened. Price got actually up to almost as high as this pivot. So if you kept your stop above that pivot, then you were okay. But we were looking at this area here, so we've come down pretty strong from there. However, we do have a little bit of a demand down here that 59.26 by 59.06, where we may see a bit of a reversal. If I look at this on my 4-hour is still higher swing highs, higher swing lows. However, my momentum is greatly waning. If I throw a quick momentum indicator on here, if I can get it there. There we go, MACD, which is my momentum indicator. You'll see that even though I have roughly the same swing highs in price, I have very significantly lower swing highs in momentum. And so having those those significantly lower swing highs in momentum, it's like when you throw a ball up in the air. It starts to slow down eventually before reversing. And so I think that we may actually break through this area here. So I'm going to switch this to a confirmation style, just because of the fact that we are definitely showing a weakening in momentum. I think a short is actually a better opportunity based on that momentum shift. Although technically we're still bullish. So these areas here are actually a little bit better than they look like in the S&P. And so I think that and we've kind of broken down out of this level. So I think that if we get a rally up into here, this could be a decent reversal. In gold, we had the contract rollover gap. And so heading up into a potential reversal area here, this is a confirmation style short. So keep an eye on this one. I don't love the basing before the level though. So keep an eye on that one for today. And then in our currency markets and our bond markets, yesterday we had talked about getting long above this level here. So price did give us a nice move out of that level. Leave me a comment section below if you're able to catch that one. If you didn't catch that and you still get a shot at it, take a look at this area here for a potential reversal. In the Aussie, we are close to our level, but haven't quite gotten there yet. Not a fan of the basing. I'm getting in front of the level, but we are close to it, just not quite there as of yet. Euro is still between our two wide zones. I talked yesterday about you could have taken a breakout around one of these areas, and the breakout to the downside looks like it's run pretty well. But I think that the better chance is to wait for the reversal trade into one of these, and then the Canadian. So not a whole lot to report in terms of currency trades for yesterday, as we are kind of still in between most of our areas. Now, the Japanese yen yesterday, we had talked about the fact, hey, listen, we've come into this level, and we said that our 6 candle rule was very much in play. We'll take a look at what happened. As we just look at it, 1 candle in, 1, 2, 3, 4, 5, 6. So in this case, you're basically, if you're following the rules, you're out at basically break even minus a few ticks, right? So or it could have technically gotten out at break even, as that last candle did pop up above. My point behind that is, that's why we have rules in place. If it doesn't make its move within 6 candles of the entry time period, it's probably not going to make the move. And so close the position out. I have found that has been a lifesaver for me. And a lot of traders that I've spoken to have said much the same, is that's one of the things they appreciate in the way that we do it. So just keep that in mind. That's something that is important, that we will continue to kind of keep an eye on and keep looking at going forward is that 6 candle rule to kind of help you understand what's going on. So if you have any questions, please send us an email, support@tradersarmy.com. Thank you so much for joining us today. I look forward to seeing you again real soon. No DMC tomorrow since we have a live trading room. If you would like to join the live trading room, go to tradersarmy.com. Use the promo code TRADEUP for 60% off your first month to see if it makes sense to become a member. We'd love to have you join us. Talk to you soon, everybody. I'll see you.